Good morning, I'm Tim Carter. I'm a client portfolio manager on npower's optimization desk. Welcome to this morning's market update on Friday the 27th of November. So looking at the markets today, they're just a touch softer across the prompt and the curve. Key drivers today are, number one, warmer temperatures are suppressing demand in the immediate forecast, although there could be a cooler spell on the horizon. Number two, we've got very comfortable UK power and gas fundamentals. And finally, number three, oil markets have retraced down a little bit from the highs earlier in the week. Those are your main headlines. If you'd like any more information, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So taking a look at those temperature forecasts to start with, today we're around about 4 degrees above seasonal normal levels, which is helping to suppress demand across the power and gas systems. Into the weekend it's maybe a little bit cooler before picking back up again through the start of December, where on the 1st it's going to be around about 5 degrees above seasonal normal levels. Thereafter, though, it does revert towards seasonal normal, with the weekend after next being a little bit cooler, and then the week after that across Europe probably dipping to 2 or 3 degrees below seasonal normal levels. So that's a little bit bullish for prices a bit further out on the curve. Looking at today's UK gas system, we've got a line pack forecast of 10 MCM long, as demand has dropped off, as I said, and we've also got healthier supplies as well. Key change from yesterday is increased flows from Holland, which is meaning our interconnectors are net importing again, partly as well due to the fact that IUK exports have ticked down a little bit. We've also got much lower CCGT demand thanks to higher winds, which is meaning gas demand for those generators is about 15 MCM lower than it was yesterday. Langeled flows from Norway are just a little bit better than yesterday. We've seen resolved outages, but flows haven't necessarily picked up to pre-outage level yet. LNG supply is also roughly flat with yesterday, although we have had 2 more tankers confirmed as the UK is their destination for the next week or so. On the power side, as I said, we've got really comfortable fundamentals thanks to high wind output, currently around 5.5 gigawatts, but that could pick up to just under 7 later today during the peak demand period. Interconnector flows from Holland have picked up back up to full capacity, but the IFA is still at 0 as ongoing nuclear restarts are being delayed over in France, and the maintenance, which has reduced capacity by 25%, has been extended to the 6th of December. Finally, on the oil side of things, we've seen prices come back down from the highs earlier this week of $46.50 per barrel, trading around $45 at the moment. That's come following the French president meeting with Vladimir Putin yesterday, and Putin has agreed not to retaliate against Turkey, although stresses that a repeat of the situation with a downed plane over Syria would prompt severe consequences. We've also seen Libya mention that they are looking to increase their output, which is weighing on the global supply glut. That's it for today and this week. Have a great weekend, and we'll speak to you again next week.